So as we're moving along, we got our next panel that's going to start about finance and fundraising. When it comes to entrepreneurs and business, getting money and how to get that money is difficult at times. I can hear you. So I want to invite to the panel our moderator, Mr. Martin Mbonu.
You did pretty good on the pronunciation, but it's actually Mbonu, so it's Martin Mbonu.
Okay, I was close. Yeah. All right. Well, at least I got the first name right. 50-50 chance. Welcome to the room. Thank you for moderating this session about finance and funding. I'm looking forward to hearing about it. We're going to keep that Q&A open for the comments at the end, and I'll let you take it away, okay?
Okay, great, thanks.
You're welcome.
Yeah, so maybe I'll just run through a quick intro of myself, and then I would also allow the panelists to introduce themselves. So my name is Martin Mbonu. I studied economics at the University of Lagos. Then I went on to work for a company called Jumia as a business intelligence analyst. I learned a lot of Excel, I learned of business performance reporting and the likes. And I went on to a private equity company called Verot Capital. I spent about 6 years there, investing across multiple sectors in Nigeria and Ghana. It was a very interesting time. And then I moved on to venture capital, which is where I am today. So investing in early stage businesses, helping them to scale and get up to the next level. So I've been in this role for less than 2 years. And it's very, very, very interesting. So I would hand over to the other person in the room to just, give us a quick update on your career so far.
Hi guys, can you hear me properly?
Yes, I can.
Yeah, so my name is Misimi Osekita. I'm from London. I studied aeronautical engineering at Imperial College London. I then transitioned into a career in banking. Did internships at Goldman Sachs, Morgan Stanley. Started my career at Morgan Stanley, where I focused on credit trading, which is essentially trading fixed income instruments based in emerging markets. So I've kind of been in that market for the last 10 years, working at various companies. Currently, I'm now at ING Bank, based in London. So I look at fixed income markets across Central Eastern Europe, Middle East, and Africa, and North Africa. I'm happy to be here, happy to contribute to the discussions that we're going to be having today.
Great, thanks so much. That was a very good and interesting background to hear from you. So I'll just give a brief background. So the topic for today is finance and fundraising. And I guess, like I was saying, we would just introduce the industry. I would like to hear more about your background, and just understand, challenges you faced, just trying to get to where you are now, maybe your advice for folks in the industry. What are the key things you did to overcome those challenges that you faced, so that people can learn from you? And then maybe we'll go on to talking about the opportunities that exist in that space, maybe not just what you're doing, but also in the general finance and fundraising space. I think those are the key things that we'll talk about. But I believe someone else has joined us on this call. Can we get to know you, and can you introduce yourself and just give us a brief your brief background?
Hello, good evening. My name is Manji. I'm a relationship manager for business and commercial clients with Stanbic IBTC Bank. Apologies for the surroundings. On the road, actually, a meeting with the client ran late. That's why. So you know how it is with the traffic and everything today.
I totally understand. At this time, it's traffic out.
But it's good. It's a pleasure to be here. Thank you very much.
Fantastic. Good to hear from you. And we have our only lady on this panel finally joining us, Aramide from Correct. Please, can you introduce yourself? Just let us know about your background, what you've been working on, and how you just let us know your chronological order of how you got here.
Okay. I'm so sorry I joined a bit late. I don't know what happened to my computer. I had to restart, but I'm happy I'm here now. So my name is Aramide Balogun, and I work as a statutory and tax controller for Microsoft. at Microsoft. I'm based out of Lagos in Nigeria. And essentially, my role covers statutory and tax compliance for Microsoft entities in West and East Africa. So
Nice.
I'm happy
Great.
to be here, and I look forward to having a great conversation and learning from everyone.
Okay, interesting. Thanks. So far, I just introduced the topic, finance and fundraising, and so the next session is just getting everyone to speak about, just tell us your personal story, how you've gotten to where you are. Key thing I want to hear is, what challenges did you face and how did you overcome it, so that you can, share with everyone and people can pick up points from that. So I'll start with Misimi. Can you just, give us that story? Thanks.
Yeah, sure. So I think for me, I probably will take the story back to my education. I think the previous topic was actually about education. So I grew up in Southeast London, which was quite a sort of strange place to grow up in at the time. Lots of crime going on and lots of different things that made it quite a challenge to focus on studying. But fortunately, I had like very strict parents that made sure that I did my homework, made sure that I sort of was focusing on my books and trying to get as high grades as possible, which enabled me to be able to go to a good university in Imperial College London, studying aeronautical engineering. And from there, I got introduced to the world of finance. I think at the time there was in London in particular, there was quite a push from a lot of investment banks to look more towards engineering and science students rather than traditionally finance students, to try to diversify their workforces, because they felt like the sort of mathematical background, the scientific background could be quite useful within the context of investment banking and capital markets. So that was sort of how I started to learn about the industry, which I, to be honest, didn't really know much about until I started doing internships and insight weeks and learning. So I think that brings me to my first point, which is, I think the most important thing, which is great that we're having this event now, is networking. I think without having a strong network, it's very difficult to have your eyes open to, opportunities that exist that you don't even know about. So I think my first actual move that I made was networking. So we would have like the likes of Barclays, Citigroup, Morgan Stanley, Goldman Sachs come to our university to meet students, and it was free. You could just go and meet people that are, doing the work that, is kind of quite tough to get into. You can meet them, make connections, hopefully leave a good impression, and that basically led to people recommending you for internships, programs here and there. So I think I'll definitely advise a lot of people that if you're students or even if you're considering changing careers into finance or banking, the first thing to do is to try to grow your network and learn as much as possible. And then I think for me, being someone that wasn't too clued up about finance, it was also a lot of self-learning. So that means going on Google, Wikipedia, and just learning about the different concepts and what is equities, what is fixed income, what is a bond, what is a stock, what are commodities, what are derivatives, which initially may come across as quite complicated if you haven't done it before. But I think there's a lot of information online now where you can just learn about all of these things, and it gives you a much stronger starting point when you now get onto internship programs and you're competing with people that already know a lot about these things from their studies. So I think the second point is, self-education. So networking is the first point. Second point, self-education, using the internet, using the tools that are free already available. Now, what can happen is you may get to a point where you've done a lot of reading and research, but you just don't know how to marry that with what happens on the trading floor, what happens in business, how to link the two together. So I think that is where you then need to try and push for work experience. And I don't necessarily mean joining a summer internship program or joining a graduate program. It could just be that you spend one day at a firm. So, for example, maybe you've got a friend or a contact or somebody that knows somebody somewhere that is willing to give you maybe like a few days where you can work shadow them just to learn how things work. So I think obviously you can't do that step without having built that network that I mentioned in point one. So networking, self-education, and then trying to gain that work experience, I think, is a strong part of the journey. And then from there, it's just, there is an element of good fortune where sometimes things just align well. But I feel like you have to prepare yourself so that when those opportunity comes, you're in a good position to maximize it and not sort of miss out. So I think it's really important to be prepared to make sure that you're always sort of learning, asking the right questions, and not being afraid to ask questions that you may think are silly questions. I think what happens a lot, and I see this with young interns now, is they come on internship programs and it's almost like they feel like we expect them to know things, so they're a bit reluctant to ask silly questions. Whereas we don't expect people to know things. We expect you to ask, the simple questions, so that as the work gets more challenging, you're able to cope with it. So very important to ask as many questions as possible. And there's no question that's too stupid to ask. I feel like, it's very important not to assume that you know something, because even those of us that work within the industry, there's so many things that we still don't know. And we are always asking questions, even as experienced people. So there's no reason why, if you're at the early stage of your career or even whatever stage of the career that you're in, if you don't know something, just ask. I'm sure that there will be somebody else that also doesn't know that thing that will learn from you asking that question. So yeah, those are just a few points. I don't want to take up too much time of the other panelists, but obviously we can come back later to talk further.
Yeah, I mean, those are solid points. Thanks for sharing those key perspectives. But I think I have one follow-on question just based on the story too. I mean, you studied aeronautical engineering. I mean, that has to be so hard. Can you give us some tips? I mean, how did you survive school? I mean, how tough was it?
It was quite challenging. It was definitely challenging. I think in the first year, it was a bit of a shock to the system, because when I went through A levels and GCSEs in the UK, and those I did quite well in. And then I sort of came to first year of university and my grades just slumped. I was kind of at, I think I had like a 2-1 or something, which is the equivalent of getting like 65% or something like that. Whereas I was used to always getting 90%. So I think that was like a bit of a wake up call, where I realized that it's a bit of a different ball game now, because in university you have to do a lot of learning yourself. You can't just rely on your lecturers and just doing your tutorials. You actually have to go home. You need to read a little bit beyond what you've learned in your lectures as well, if you want to aim for the top grade, which is a first class. So in my second year, I knuckled down a bit more, and I was a bit more thorough with my work, and I was fortunately able to bring my grades back up. And then by the time I left, I was able to get my grades back up to the first class. But I'll say it was definitely a challenge, especially the intensity of the work, because it's quite challenging, learning all these different equations and formulas. Obviously, it helps being mathematical already, but I think probably they put a lot of work into a short space of time. Whereas maybe in countries like France, you do the same degree in 4 or 5 years. I feel like in London, like in Imperial, for example, they like to make it a bit more intense. So anybody that's planning on studying at a place like, whether it's Oxford, Cambridge, Imperial, LSE, I'll say that you just you need to find the right way to balance your time between studying. Obviously, it's good to socialize in university as well and enjoy the experience, but time management is really, really key. And if you can be very disciplined with your time management, you can find a good balance. Yeah.
Yeah, great. Thanks. That was very helpful. So I'll just jump on to Aramide to, share her experiences as well, so that we understand, where she's coming from.
Okay, my experience is quite different. I think I was one of those people who, at a very early age, I sort of knew what I wanted to do. Right, I knew I didn't want to go into sciences. I didn't like maths, and I remember that even though I got an A in integrated sciences, my my counselor at the time in high school wanted me to go into a science class, and I said to her that I I've always wanted to be an accountant, and I studied accounting right at Covenant University, and I think from there I just progressed my career. I started my early career at KPMG Professional Services. So I've always been in that path, but I would say my first um, my first sort of interest in investing came at a time when my parents had difficulties paying my school fees in 200 level, and a neighbor who had just received his dividend, just cut a check for us, and we were able to then pay my school fees. It was so fascinating to me because I was like, for somebody to give that sort of money at that time, it meant that that was sort of residual income for him. And that sort of sparked my interest, into the world of investing. So I remember that my early investments was in stocks. I'm sure many of us at that time, when there was when there was a recapitalization of the Nigerian banking industry, many of us bought shares. At that time, I think I bought Zenith Bank. I bought some banks that are no longer that went under, and yeah, I mean, and then later on, it was pulling funds together with colleagues. It's popularly called ajo, or esusu in some, I mean, depending on what language, pulling funds together and then getting those funds and investing in fixed deposits, and later on moving into money markets, agri-tech, um, investment clubs, venture capital, sort of VC type investments, and that has really been my journey into investment. So yeah, I don't really have I don't have such an interesting story as my other panelists, but my journey was pretty straightforward.
I beg to differ. I think that was a very fantastic story. Just coming to, sharing real life experiences of how the stock market sort of like took off in Nigeria, and that drew you
Yeah.
into the space. I think I'm very familiar with that story as well. I know the biggest boys in the scene were the stockbrokers in Nigeria. So, yeah,
Right?
that's cool.
Yeah.
So I just wanted to quickly, switch to, having your perspective on the industry. So the question right now that I want to ask is focusing on reinventing in banking and investments in the new world order. So we just want to focus on talking about key trends and opportunities in banking and investing. So I'm trying to get your personal experiences regarding this topic, right? I think Aramide has already shared a wonderful experience. So shall I allow Manji to share his personal experience in terms of this key industry? So banking and investments. Manji, are you still with us? Okay, I'm thinking that we might have lost him. So, Misimi, do you want to take that?
Sorry, can you come again? Network went off slightly.
Okay, so I'm trying to get your personal experiences in regards to banking and investing. So, what led
Can you
you
hear
into
me?
this space? Yes, I can hear you. Can you hear me? Hello? Okay, so maybe I'll just try. Misimi, do you want to take a shot at this question?
Sorry, the network is a bit unstable here because I'm on the road. I had to turn off my video so that I would be able to keep up. Can you come again?
Yeah, so do you know what we can do? I can hear you clear. So just listen to the question and listen to people's responses. Then once they finish, maybe you can respond as well. Maybe that works. Okay?
Hello.
Yeah. Don't worry, Majid. I'll go to the other panelists and then we'll come back to you, okay? Thanks.
Yeah, hey, is it Aramide? Yeah. So yeah, I think Aramide mentioned sort of personal investing leading into your sort of interest in finance. For me, I feel like for me it was almost the other way around, where I obviously I have a career in banking and finance, and then from that career I've learned about different ways to invest, like personal investments. And I actually have an older brother that runs an investing company that sort of mentors people in how to invest in stocks, and ICE and ETFs and different things like this, called Stock Pickers Academy. So I don't know if people want to check that out on Instagram or Twitter or any of the social platforms. Stock Pickers Academy, which essentially is a platform that I've also used and learned a great deal about how to approach investing your personal funds into the stock market and the best types of strategies to actually execute those trades as well. So that's been quite a big part of my sort of investing journey, and I feel like particularly during the pandemic, we saw like quite a big movement of sort of younger people, particularly in the UK, where we don't, young people are not necessarily as clued up on investing as, let's say, in America, for example. We've seen quite a lot of people start getting involved in stock investment, and I saw quite a lot of people did very, very well over the 2020 2021, especially after the stock market crashed, and then started to recover quite aggressively. So I think that's one trend that I've seen definitely develop, where younger people are a lot more interested, and you have people that are very active in cryptocurrencies, for example. I was speaking to a young man the other day. He's about 20 years old, and he's been trading cryptocurrencies, making sort of like £50,000 over the course of a few months, with starting from a very, very small base. So there are lots of young people out there that have learned strategies on how to make money in, for example, cryptocurrency or FX or the stock indices. So there's so many different ways that people can get more involved in the stock market. I think we tend to see that, particularly amongst sort of ethnic minorities, there's a bit of it less involvement in the stock market. Whereas if you look at some different sort of classes of people, let's say the wealthier people in America, for example, a lot of them have investments already, and they've been benefiting from some of the stock market rallies that we've seen over the last over the last couple of decades. So I think it's really important, especially around this time where inflation is very, very high. It's very difficult. The cost of living is rising rapidly. It's very difficult to actually earn a positive return. If anything, the funds that you keep in your bank are losing real value because of the amount of inflation. Obviously, you're able to buy less products with the same amount of money. So effectively, your money's value is depleting. So I think it's definitely a good time for people to start learning about how they can be smarter with their own personal funds. How do you pick stocks? How do you decide on what areas to invest in? I know, for example, some people looked at the market this year and decided that, with the war going on in Ukraine and Russia, that gas prices are likely to rise, and they made very early investments in gas stocks that have, right, given very, very, very healthy returns. So that sort of thing is only accessible if you're talking to the right people that are sort of, involved already, networking with the right people, so that you can see the ideas that different people are doing, where they're able to, double their savings over the course of a year, without doing any work. Just putting it in a particular ETF or particular stock that they like, following trends, and also just doing it in a smart way. So I'll say, yeah, for me, investing journey, definitely the Stock Pickers Academy is quite a big part of what I've been able to use as a tool to learn from other people and be more aware of what's going on in the market in order to, help boost the investment returns.
Great, thanks. Stock Market Academy.
Stock Pickers Academy.
Stock Pickers Academy. Okay, that's a really great one that folks can check out later to try and get a better understanding of the space and all. Okay, I think we lost Manji. So let me go on to you, Aramide. Do you want to share? Actually, I have a different question for you. I'm trying to understand your institution. What's their current take on macro situations, and also can you relate that to investing and finance? I just want to hear what your institution is, where they stand in regards to what's happening currently.
So I'm going to deflect this question a little bit because there are sort of guidelines regarding what I can say about my organization
Okay.
in public. So all I will say is, Microsoft supports the banking and investment space through various digital transformation programs, right? I can't really speak to specific products. I will refer you to our website and our various social media platforms. I'm sorry if that doesn't answer your questions, but I can just piggyback on some of the things that the last panelist said, if that's okay.
No, sure, fine. Please go ahead.
Okay, for me, like the trend that I see, as I was preparing for this session, I was thinking about, what banking and investment was 2 decades ago, in the early 2000s. I remember that in order to buy, even when I bought into the Nigerian bank stocks, it was such a tedious process. I had to go into the bank, I had to fill a paperwork. And when I received my dividend, it would be like in a check format. I had to go to the post office to pick up the dividend warrant and then had to pay it into a current account. It was such a tedious process, right? I had to rely on my stockbroker to share with me what, the performance of my stock per time. And then I look back to today, right? I remember buying some MTN shares last year, and right at my desk, without leaving my desk, I could just purchase those shares, fill out a form. I think it was done on an app, and it was so easy. So one of the trends that I've seen is the continuous transformation, from the continuous transformation in that space, the use of technology, how technology has aided, innovations in that space. Today, just by downloading an app, I can purchase foreign stocks without even exchanging naira for dollars, right? I just need to go on the app, and then pay into I don't even have to do anything. I just need to pay into their bank account, do my KYC online, submit all whatever documents that I need. And right there and then I own a foreign stock. I can, from here in Lagos, I can buy Euro bonds. Those are not investment opportunities that were available, 10, 20 years ago. 10, 20 years ago, the most you could do for the most part was fixed deposits and then buying land and then dealing with omonile, as we call it in Lagos. Today, I can buy a property using a developer, and I don't even have to visit the place. And on the day my property is ready, they hand me the keys. I sign off the paperwork. I don't need to appear in court to search papers. I don't need to get I obviously need to get a lawyer, but like they will do everything for me. So there's just been an explosion of opportunities, different kinds of opportunities. You no longer have to wait till you have a certain sum of money before you can start investing. You can buy fractional shares. You can crowdfund with other people and invest in something. We saw so many agri-tech companies come up. A lot of us were investing in agriculture until hopefully it all comes back again. But like people were investing in agriculture without visiting a farm, right? Without visiting a farm, you are helping promote agriculture in Nigeria. So I've seen that a lot has happened over the past couple of years, and I can't imagine what's coming in the future. I mean, it talked about cryptocurrencies. Never ever ever would I have imagined that people will be selling a still picture as an investment, the NFTs, metaverse. I remember attending a conference and somebody said, "Oh, do you want to buy land in the metaverse?" I mean, I'm old school. I was like, no way. If I don't see the land, I'm not buying. But companies are buying into the metaverse, and those are also investment opportunities that were not in existence 10, 20 years ago. So definitely lots of things are happening in that space.
Yes, true. Very interesting and very insightful. I like the way sort of like explain what's also available on the local scene in Nigeria. I think this is a good mix of things. Just hearing from what's happening over there in the UK and other jurisdictions, and also just getting a sense of what's available also in Nigeria. So I just want to quickly move on to the next question, which is around policymakers and how they can come in to help the space. One area I'd like to take it from is from the risk perspective. You mentioned agribusinesses, and I think a bunch of them have sort of like gone under or owing people some form of money and the likes. So maybe that just takes me to the next question: policymakers and government agencies. What do you see their role as in enabling investing and financing? So I'll take it back to Misimi to comment on that, and then I can come back to you, Aramide,
Okay.
before we take it on to see comments and other questions from the audience.
Sorry, can you just repeat what was the question? Sorry.
So the question is around understanding what the role of policymakers in investing and financing, right? I mean, we'll see one issue is the risk of investing in businesses that might go under. I'm trying to just hear your view on what role policymakers have in this, in enabling people to invest.
Yeah, okay. I mean, I can give a perspective from the UK standpoint. So obviously we have the FCA, Financial Conduct Authority, that they have a role in ensuring that certain investments that are considered, very risky are only done by people that are essentially qualified investors. So, for example, during the sort of boom of penny stocks that we saw in 2020, where you had these things like GameStop, the bankrupted companies that were suddenly having ridiculous prices, there was a bit of a clampdown there where a lot of the platforms that we use for investing essentially ban people from buying those, stop them from being able to buy those stocks, because those stocks are very susceptible to pump and dump schemes where, people talk up the stock on Twitter, on Telegram, on all the different sort of platforms. The prices rise to excessive levels, and then obviously people that are not educated in investing well, if they buy it and then it now drops back to zero, then they essentially risk losing all their money. So there's a lot of oversight that happens from policymakers where they ensure that people that are taking that sort of risk have like some sort of experience. So you would usually have to fill out a form that sort of describes your level of knowledge of financial markets before they allow you to use the platforms. I think that's the main sort of risk mitigating policy that I can think of. I think that we see in the UK. Obviously, you always get warnings that if you invest, you can risk losing all of your investment. And I think definitely one piece of advice I would say is that if you're investing in stocks or venture capital or businesses or whatever it may be, I would say make sure that you're investing an amount that you're willing to part ways with. So basically invest an amount that if you were to lose everything, that your life won't be destroyed, essentially. And I think that's always a good way to approach it, because it makes you not necessarily need to panic if your investment drops in value, because you're not massively affected, as you can see, view it as a longer term investment. Sometimes some people are sort of gambling a bit where they now go and take out loans to go and be investing in things, but obviously if your investment now drops in value and you can't pay off your loan, then you could risk bankruptcy. So it's very important to the first risk management advice I'll say is to make sure that the amount that you're putting into risky investments is an amount that you're comfortable with if the value was to drop to zero tomorrow, for example. Obviously that's unlikely, but you need to just be prepared for that. So don't go and put all your life savings into something because somebody on Twitter said that the stock is good. I think you need to be very prudent with how you do that. And policymakers are doing a lot to make sure that people are approaching that, but ultimately it's the decision of the investor.
Yeah, thanks. I mean, that was very, very helpful. Yeah, I think and I just want to reemphasize on that statement around, investing and knowing your risk profile. I mean, you're not going to invest cash that you need for maybe school fees or something critical, and then put it into an asset that is very risky and live with the repercussions of that. I think it was Warren Buffett that said something along the lines of invest in companies that even if the stock market goes for the next 10 years, you will still be comfortable holding those stocks. But then you wouldn't put the kind of money that you need to buy food for tomorrow into that kind of investments. So
yeah, just to add quickly, I think someone asked a question about advice on investment for if you don't earn so much. Look, I mean, I think there are ways to invest very small amounts of money, especially when you look at things like ETFs or ETFs are exchange traded funds, so you basically get access to a portion of everything that's inside the index. And you can do small amounts. You don't need to have a lot of money. I mean, I think certain stocks, the actual price of the stock is very low in terms of, because they've maybe split the shares into a larger number of shares, so you can actually access, if you have let's say the equivalent of $100, you can invest in something, most likely. So I'll say that if your savings is even between $100 to $1,000, for example, that's enough to begin your investing journey. It doesn't matter how small you're starting with, as long as it's an amount that you're comfortable with putting it away and not something that you need imminently. Whatever that amount is, you can start. And I think that's the main thing. A lot of people don't start because they don't know much about investing, and sometimes it seems a bit risky. But I'd say that the best advice I'll say is to just find an investment like a stock or something that is affordable, that you feel you like the company or whatever, and put a tiny amount, even if it's like $100. Let's say you buy one share of Facebook or Meta, for example, that's going to cost you about $180 or something. If you have $180 equivalent to spare and you like Meta or Facebook, then there shouldn't really be anything to stop you from buying one share. If that share doubles in 2 years' time, then you make that money, and then you've grown your portfolio. That gives you more options to then look at another investment. So you don't need to necessarily be investing at a fast pace or putting large amounts away. You just start small and grow at your own pace.
Yeah, thanks a lot for that. I think that point is very, very self-explanatory. You can start small. You have to educate yourself and know exactly the risk that what you're investing in contains. Okay, so Aramide, do we have Majid back? Majid, can you hear us?
Yes, I'm back now. Yeah. Sorry, I had to switch off my video because of the network.
No
Can you hear
problems,
me?
no problems. Yeah, so we're previously just talking about government involvement and policymakers, what role they play in maybe enabling and aiding investments and financing. We're taking it from the angle of risk protection, protecting the public from losing their funding. But I mean, I just want to see what you think about policymakers. Do you have any points to add to that to that topic?
I think from our end, from the banking sector, we do have our own um, regulatory authorities that guide how we manage customers' deposits, and which in turn reach out become investments. We have the NDIC, that ensures basically the funds of the clients that deposit funds in accounts with our banks. So we're also guided with regulations based from CBN, as well as other regulatory bodies, because there are limits to how we can trade with clients' funds, or levels of how much deposits for clients' funds can be held within the. Is it, it it's basically around CBN and NDIC. How we look at the main key drivers for deposit banks, basically, that have influence or large policies regarding clients' funds and investments. For just quickly, just add my 2 cents on investments, basically, since we're talking about that. I know, coming in from where I started off, I started my banking career with GT Bank. At that point in time, where it was a trend, a major trend was treasury bills. Working on major investments were around treasury bills because of the high yields at that point in time. But with recent changes, people have had to diversify their portfolios, basically looking at, and this is where the growth of these smaller investment arms have come in, or investment opportunities have come in, with people going into things like PVest, Cowrie Wise, and looking at working in a bank. We look at how we can also adapt in ways that we can support our customers, and you know give offer similar services or even better. So coming to Stanbic, I now realized the value of having multiple portfolio options, because Stanbic IBTC is involved in a number of investments. We do have our asset management arm. Basically, I work with the bank, but we have our asset management arm, which we sell our products to the customers. I'm sure a number of people would be aware. The Stanbic IBTC Money Market Fund, which invests clients' funds in a number of securities. So it makes it a bit easier for the regular man that might not be too in tune with investment options and everything. So it makes it easier for clients to just come in and know that, okay, they can have returns on investment, right? And you can start with as little as 5,000 naira. So this allows access to a large number of people, large number of clients that might not be readily inclined to invest their funds, but because of the ease of investing with Stanbic, or our asset management arm, it sort of supports the growth, or growth in investment for regular Nigerians. So that's just the 2 cents I wanted to add on that. But for the regulatory authorities, it's mostly CBN and NDIC.
Great, thanks, Manjid. I think those are very strong points. So I want to piggyback, just honing on what you just said about using money market instruments offered by was it Stanbic, and through this question that we got from the comments at you, So someone was asking if he doesn't have a lot of money, where can he invest and how can he go about investing?
Oh, that's a good point, because that's where I touched on that a bit, because it's a good start to come in with our asset management options. We do have money market funds that you can invest from from as little as 5,000 now. You can start your investment journey from there on, at least. And then we also have our stockbroking arm for Stanbic IBTC that can also guide you on investments and on stocks, on stock trends, and sort of basically creates like a teaching platform for would-be investors. But I think ideally for someone with small amounts, yes, ideally starting with the money market options would be ideal for that kind of clients, because that way it's relatively low risk, and the terms are quite favorable for someone in that category.
Okay, thanks. That's another option that can be considered, money market instruments. Although I worry about maybe the rate of return and FX exposure for that kind of investments. But I just want to go over to Aramide now, and if you can help us also touch on policymakers in the investment space, banking and investments. Let's just have your thoughts on that.
Okay, thank you. I think the major role of policymakers is to enable business, right? Is to enable business, is to provide guidelines. If I look at Nigeria, for instance, who are the major policymakers in this space? I would say the SEC, Securities and Exchange Commission. I would say CBN. I would say NDIC. But then we still have a lot of companies springing up that these regulators basically have no idea what they do, right? I think policymakers need to be more out there, right? In terms of providing information, in terms of sensitizing the public. Today, I can just set up a company. I don't have to go to NDIC or whatever, and I start pulling funds from people. Nobody knows what I'm doing. It shouldn't happen that way. There should be minimum criteria for companies in the investment sort of banking space to meet. I think right now there are lots of regulations coming up in that space. I mean, recently, some of the agri-tech companies that went down, their excuse was that they had to meet some registration criteria with the SEC in order to allow them crowdfund from the public. Unfortunately, those regulations are coming in very late. A lot of people have already lost money. But if those regulations came up at the beginning, when those sort of products were becoming popular, maybe the story will be different today. The other thing is the regulator should also seek to understand, right? I remember last year there was a regulation from CBN banning companies from or banning banks from engaging in crypto related products. What I thought the regulator should have done in that instance is to sort of understand, what is this cryptocurrency about? And then formulate policies to guide um, investors in that space. That's what we saw happening in the West. They didn't just outrightly slam a hammer to say no crypto, right? They tried to understand, they tried to formulate policies. In fact, some countries adopted it. Whether it was the right thing or not is a different ball game. But I think for regulators in this space, what we see is when things are going bad, they just slam a hammer, like they just ban it. You just ban everything, and investors lose money. We saw what happened with Gokada and the bike hailing services. That's a form of investment. That was VC investment that just went down the drain. And today Okadas are banned in Lagos. Whereas policymakers, government could have used that opportunity to change the landscape or to change that industry, to formalize the bike hailing industry instead of outrightly banning them.
Yeah, I mean, I agree very much with your point of view. But all over the world, it seems like regulators and policymakers tend to lag behind changes that happen in investment and banking space. But I guess it's the reaction to those changes that is more important. It seems like in the Nigerian setting, to ban is always like the first thing that comes to mind. I know even we mentioned a couple of stockbroking firms allow you buy stock in the US. I know all those guys were also hit with freezing their accounts and the like, banning of crypto. Those are the things that we're seeing in this market. And I guess it's a bit different from other markets where they're trying to be more inclusive and make sure that everybody is carried along. So I just want to go towards the questions we're getting on the comments. So I'll read out some of these questions and I'll see if any of the panelists have an interest in answering any of these questions. So you can just indicate which ones you would like to answer, and then I'll let you go at it. So somebody asked a question about, I think we've answered this question. So there's a question around, there's still a gap in accessing equity investments for most businesses, especially those that have long lead times before they become cash flow positive. Meanwhile, majority of businesses cannot access debt capital. How can MSMEs continue to tap into available resources to fund business scale? Yeah, so this is essentially just asking how small businesses can access funding to scale their business. Does anybody have an interest in responding to this question?
I can try to take that.
Okay,
Yeah, just like I mentioned earlier, I said one of the role of policymakers is to provide access to information. You will be surprised the number of products, the number of development banks in Nigeria that are giving out loans, that are giving out funding to micro businesses, to small scale enterprises. But the problem is that information is not spread widely. People are not aware that it exists. The BOI gives out loans, for instance. How many people are aware? Then the other thing is, what's the level of KYC that is required? If you are giving a small business funding and you are asking them to bring things that they cannot provide, then you just make it difficult to access. Then are you also promoting businesses that impact the real sector, businesses that impact the common man? It's as if in Nigeria, policymakers focus on one side on particular industries. If it's not oil and gas, or if you are not a known name, you are not likely to get funding, right? I think for the person who asked that question, I would say there's lots of information available. I know BOI has lots of funding for small businesses. Whether you meet the KYC or the requirements is another question. I know Lagos State, for instance, through there's a Lagos State small scale. I don't really remember what it's called. I know they also offer funding. I know there are funding opportunities from individuals. Tony Elumelu Foundation, for instance, TEF, every year they bring entrepreneurs together, and people who qualify get some sort of funding. I think you should definitely keep your ears peeled, keep your ears to the ground. Forums such as this can also provide you access to the sort of information that will help you get the funding requirements that you need for your business. But there's definitely funding out there. Maybe Manji, who is in the banking sector, can also help, because I know that banks also give out some sort of loan. There's been a lot of policy from the CBN to encourage banks, commercial banks, to give out funding to small businesses in Nigeria. So you should definitely tap into that.
Great, thanks. Manji, do you want to comment on that as well, or you think she has adequately covered it, which I believe she has actually? Okay, so I'll just go on to...
Hold on. Sorry, I need to change my network. I'll respond in a minute.
Okay, sure. So I'll just take the next question while we wait for Manji to, give us a few points on that. I think there's another question that says, appears majority of venture capital is chasing tech businesses. What are some of the opportunities non-tech enabled businesses? What are some of the opportunities for non-tech enabled businesses doing critical impactful work in agriculture and healthcare space? Yeah, I mean, I think I can answer this one because I work for a venture capital firm that does not just invest in tech-enabled deals. We also invest in agriculture and consumer products and services. So it's not all VC funds that focus on that space. And most VC funds are, tech-focused in nature. But just like what Aramide was trying to explain, because the news and the hype is all around tech, doesn't mean there are not other players that are supporting other services. So I know like the ARAF is a fund dedicated solely to investing in agricultural businesses. So these are the kind of things that you need to, build your network to find out more about such funds that are available, that are out there, so you can connect to them and see how you can raise that funding. I mean, I know it is tough to raise funding from some of these guys, but the fact that that they're available is one step that can take you there. Yeah. Manji, do we have you back? Do you want to chime in on that point?
Yes. With that, I think regarding from the banking sector perspective, there have been initiatives recently geared towards SME financing for SME customers, because the banks have realized now at this point where with the way things are and the trends in Nigeria, where small businesses and SMEs are prime candidates to actually drive the economy in terms of providing services, in terms of logistics and a number of services to provide. So the banks do have
Yes.
So without driving too much on it, there are initiatives in place or in terms of funding solutions for SMEs with viable business plans and business portfolios to support for growth and working capital, aid working capital gaps, basically to bridge working capital gaps. It also depends from the banking perspective. These SMEs need to also meet the risk acceptance criteria, because one of the major parts of issues of lending is repayment. So we also have to look at that. We also have to look at proper analysis of the customer's business, due diligence, and looking at it as a going concern, because we have to be able to sieve out or weed out customers that might not be able to cover obligations all in due time. So there's a lot of due diligence and analysis involved, but there are initiatives in place for funding for SMEs. I don't know if that answers your question.
Yes. Thanks, Manji. That answers the question adequately. So in terms of, to wrap up, I just want to go around panelists one more time and just have your final views on I just want to get your final views on what you see future trends in investing and banking space. With COVID in the past, the switch to work from home, and then with high inflation rates that we're seeing currently around globally. Everybody's affected. Energy crisis in the UK, in Europe generally, and then if you come down to Africa, some are saying it's a potential debt crisis. What are your expectations? What do you see is coming in the near term, in the future, and any advice for folks on this call? So I don't know how you like to take that. So I just want to get your view on the future for banking and investing, and also advice for everybody on the call. So who wants to go first?
I can go first.
Okay, please, Aramide. Thanks.
So I think right now is the time for capital preservation. I think the world is going through a difficult cycle now. I won't advise anybody to invest in any risky, you know, it's better to have your capital than to lose your capital and the huge investment returns you're expecting in the future. So if you're investing in stock, for instance, I would say you should be investing in stocks with long-term potentials. I mean, technology will continue to, there will continue to be innovations and transformations in the technology space. So definitely technology companies. I don't know about cryptocurrency and NFTs and metaverse. I know a lot of the technology companies that set out to invest in the metaverse space have pulled back funding, and that if those people with deep pockets are pulling back funding at this moment, then it says it means something, right? I think people should. It's going to be a long ride, but the world will survive. The world has been through this cycle before. Wars are not new. There's been wars, but after wars, the economy recovers. In Nigeria, we're going through an electoral cycle. The next couple of months will definitely be difficult. And even after the elections, of course, inflation might go even higher because subsidy will be removed. The FX will probably be devalued. But it's a usual cycle. I think everyone needs to be patient. I don't think the world is coming to an end yet. I mean, I'm not God, but I think that this cycle will pass and this time will pass. People just need to be people just need to be calm, and people just need to be patient. We'll all ride through this season, but it's better to ride through the season with our head up high rather than losing everything we have because we're trying to gamble in into different products. Yeah.
Thanks. Yeah, I mean, there's a couple of points to take away from there. Preserve cash, invest in what you know. I mean, yeah, I think, and definitely would. I mean, I guess business cycles, the boom and the bust.
Mm-hmm.
We'll come through from this. So, who wants to go next? Manji, Misimi?
Yeah, I can go. Yeah, I mean, I tend to agree with everything that was just said by Aramide. Yeah, I mean, I think the market, I think the world is in a very difficult place, not just because of the war, but I feel like there are geopolitical tensions all over, even in the UK. Even in America, you have, the potential of another Trump election coming in a couple of years, or if you want to talk about what's going on in Russia and Ukraine, or what's going on in Europe, the gas crisis, the inflation crisis. So the world is definitely in a difficult place. I think that, obviously there are a lot of opportunities because of that. But I feel like any investments should be done with caution and not with amounts that will wipe you out. In the sense that you need to be very strategic in how you don't need to be in a hurry to invest, because even if you buy today, you'll probably get a better opportunity next week to buy. So I think it's good to just stay on top of what's going on as well. All over. You have China, Taiwan. You have Russia, Ukraine. You have elections in Nigeria. You have elections in lots of different countries as well, and that are important countries globally. So it's very important to just be commercially aware of what's going on in the world, of politics and economics. And yeah, I mean, preserving capital is really important. I think it's a season for survival, where from an investment standpoint, it's a season of survival in the sense that those that are in a position to invest when we finally get towards the end of this difficult period will profit the most. So if you can keep going, keep surviving up until that point, then you'll be in a very good position, whether you're investing in property or investing in the stock market or even cryptocurrency, whatever it is, like there will be a better time, I feel, to be invested. So I would say, like, just keep on top of the news, keep on top of sentiment, and I'm not saying don't invest, but I'm just saying, the timing, is evolving. The best, nobody's going to invest at the bottom, but at the same time, you don't need to invest everything all at once. I think it makes sense to space it out, bite-sized pieces. I'd say is the best option at the moment, and that's
Yeah, thanks, Misimi. I agree with most of the points that you echoed. The cash preservation and just one end of things. So I'll just hand over to Manji. Do you want to also add your perspective on the future?
I think I'll echo the same sentiments as everyone. Regarding investments, I would say for now, given the time we're in now, I would say start small, start safe, and then you build from there, and you stay close on trends, keep up with trends, and seek as much knowledge as you can. Never be afraid to ask questions, whether with your stockbroker, whether with your relationship manager, whether with your family members or a friend of yours that is into investments. I think it's very important. Seek as much knowledge as you can before taking any investment decisions, and don't fall traps to any high yields, or don't let the numbers fool you. Just pay close attention. Thank you.
Yeah, thanks. Thanks so much to the panelists. I think it was a very insightful session, and it was just good to hear about your different backgrounds and where you're coming from as well. So do have a great rest of your evening and start to the weekend. Thank you.
Cheers.
Thank you.
Thanks everyone.